being in the right sectors will be paramount to success in 2023. Last year, we saw the greatest disparity between growth shares and value shares that we saw since the tech wreck some 20 years ago. Although in 2023, we've already seen that trend reverse with tech and growth coming roaring back. We'll have a look at the different sectors and the places to be later on in the report, but the man guiding us through in his weekly report is Gary Glover. Good morning, Gary. How are you?
You know, great, Chris. Lots to unpack in there this week.
There is. I looked through the charts and I was going through and going, this is a great report. I like it. And then when you got to the sectors at the end, I was like, oh, right, this is really the juicy part. This is where you're talking about 2023 and the year ahead. But before we jump into that and also have a look at the indices, it's probably worth just checking in on that portfolio, which is that table that you have at the start of every report. And talking about these two different numbers here, because you've got the model portfolio since the start of the financial year, some 7 months ago. And reference this number here, which I do remember, but maybe it's been doing these interviews for years now. What's the relevance of
So 30 June 19 was sort of pretty much when I went from managing pretty safe, sort of conservative, sort of covered call portfolios, which sort of I'd done for sort of 6-7 years. And I guess it's a nice sort of safe way to earn income and weather bearish markets. It's probably slightly underperforming bullish markets. You outperform in sideways markets. You smash it when the market's down because you're getting great premiums there. So, but it became a bit predictable. So from sort of June 19, I thought, okay, well, let's just be a bit more directional there, so we can. I've been doing this game a long time here now. I should be sort of trying to push a little harder, strive a bit harder for some high returns. And so since then I've just been more directional, sort of just more focused on sort of being in the right stocks, trying to capture moves and risk management. And personally my trading has moved that way as well. So just trying to outperform really. That's the essence. So obviously this year's been a pretty good one. Obviously we're up 23% for the 7 months, which is probably the strongest year I've had. So so we're moving in the right direction. So as a trader, we want to, even I'm 51, I'm still trying to improve, Chris, still trying to get better. So that was the object then. So we're hopefully we're only halfway there. We're not still got further to go. But just trying to sort of get better each year is the goal.
Well, it's a good thing you've got this report because you're unpacking the trades as they come through, your research on the weekends. I know you were saying your eyes were sore from the amount of reading you were doing on the weekend. So it's good that we've got this report and you summarise it for us. So we get the benefits of all of that research and experience. So if we look at that and apply it to the NASDAQ, so we've seen it's had that healthy candle last week, a relatively wide range candle, broke out that downtrend and surpassed that recent high that we saw in December. Where to from here on the NASDAQ?
Yeah, it's interesting. Obviously, this has really powered on the last 4 or 5 weeks. Had a pretty strong move out of that sort of high low, sort of broken that range here. So I think we sort of indicated we were confident we would actually break the upside there, and then maybe come back and retest it there. So look, cycles were pretty positive for 23, and that October 22 low, that was always going to be our preferred low. Probably, the next sort of month to keep an eye on there is around March, sort of, late Feb, early March is sort of when you sort of typically get another sort of high low. So that's a bit of a turning point just to keep an eye on there. Considering we've had a bit of a pop, I still think the market's a little messy here, a little uncertain. So I still think we'll probably retreat back a little bit and then go from there. So, I'm hoping we see a little bit of a light sort of pullback here, just sort of nothing, don't see too much volume, just sort of maybe be a bit corrective in nature, ease back into sort of early March, and then then the next leg up can be quite good. I mean, if our cycles are right, our next leg up could be even more powerful than this leg here, Chris. So would like to sort of see some retreat here and then set up here. But look, so far looks pretty good. Everything seems to be sort of playing out here. We sort of get, obviously inflation is sort of cooling there. Market's warming to growth again. But as I say, that 2000 and 2003 did take a little while to sort of the whole thing did take a while to develop and did need to sort of set up. two or three sort of high lows there before it really sort of wound up here. So I still expect something similar here.
We'll look for that on the NASDAQ. If we move to the S&P 500, the broader index that covers more of the US indices, we've got that it broke out of that channel. So this downtrend line here, that was one thing that you were looking for. And at the same time, it's also created itself a higher low. So it sort of came down, had that big dip that you looked at in October. You called that really well. It's really higher low, and then it's surpassed that recent high. So what does that mean for the S&P 500?
Pretty shallow pullback, wasn't it, really? So from that sort of December high. So pretty mild in there. And then now we've sort of got going again. So it is showing a little bit of strength there. Hit a bit of a key level there around 4,200. So I think that might get some resistance there. I'm hoping it just sort of retreats here, maybe consolidates back in a corrective manner, and gives us another sort of chance here, maybe sort of slightly lower here. But very constructive here. To say the cycles are still pretty positive there. So yeah, I'm sort of showing some constraint here, but I'm trying not to be too underweight either, Chris, as well. I sort of think there's opportunities there. Got to keep playing those. It is a bit of a choppy market, but still plenty of trading opportunities around. So just got to play those. But yeah, so I'm probably a bit neutral here. I'm hopeful we'll see a little bit of a retreat after this nice pop. And I can come back into sort of early March. That's really my sort of ideal setup here.
Okay. Well, if we use that ideal setup, we look at that, we'll look for the trades to unfold. We look at the Aussie. This is kind of the interesting one because you can see you've highlighted here that you've got the numbers. You've got the numbers of where it's hit the recent highs, and it's come just shy of it as it had that long surge, a quick surge that we've just seen. I'm tempted to say that maybe if BHP, Rio, and Fortescue had held up, they hadn't rolled over in the last week, do you think maybe we could have actually come back to these highs?
Yeah, it's funny. Sometimes when we get this close to an old high, oftentimes you go back and retest it. So you can get it's funny when you can sort of go back near them, like we've done here, and that can sort of be a top there. But yeah, I find as you're getting close to them, sometimes I just want to go back and retest them. So we are close there. Just the only thing for me, there is an overhead trend line there, which is a long-serving trend line, and it hasn't had a lot of touches on there recently, but I just do respect that from a long time ago. That was sort of something which was quite dominant in the past. So just sort of something to keep an eye on there, just as we've gone back up there. Just struggling to sort of see with reporting season coming up here too, Chris, how we're going to get more gains out. It was sort of impressed on Friday where I think sort of BHP and Rio was sort of down pretty hard, and the index sort of hung on. So some other sort of sectors were doing some lifting there, which is what we will need to see. But yeah, still think that we'll probably edge back here. I just feel like the market's looking a little tired here. Just hard to see where the gains are going to come from. But we do have reporting. Reporting season sort of started here. Really kicks into gear. Probably next week is probably going to be the heavier week. Yeah, just feels like we're sort of up here. So yeah, look, we could expand to a new high. I think in 2002, 2003, we kept going to new highs and then come back to new lows. That was a bigger, more erratic sort of move here. I don't sort of see that here. I think maybe we'll stay under the high here, retreat here, and then when we come back, and then commodities can come back as well, and then maybe once everything's sort of gone through the cycle there, then maybe the second half of this year we can start to get going and move through the high. But yeah, it just feels like it needs to have a bit of a cool off here. I'm still worried about commodities here. I sort of looking through some of the charts on the weekend there, just there's lots to be concerned about there with a lot of the commodity sector there.
Well, we'll look at some of the breakdown of the indices, which is critical to the Australian performance, and that's what you're alluding to here. Some other industries need to kick into gear. When we have a look at the Dow Jones, so at the start, and in your report, you've talked about that discrepancy between the growth and the value. A couple of weeks ago, you really started talking about how the NASDAQ was outperforming sort of 4 out of 5 days, and that really started to be that pivot point where it really surged. This is more of the value side, if we can call the NASDAQ more of the growth, and it's been underperforming. But how do you read this period here when the NASDAQ sort of been outperforming?
Yeah. So it's the first time really. So that the Dow's underperformed here. So the last 4 or 5 weeks. So it's been the index sort of struggling there. I mean, our index has been stronger, and obviously the growth has been stronger here. So the NASDAQ and the S&P. So yeah. So look, I just slight shift there in the view of the market. A bit more growth oriented there. So some interesting sort of tweets and sort of comments there overnight. Okay, Chris, I saw Yellen basically saying that with this high, with the unemployment, so low here, you can't see a recession. I think it was Goldman Sachs or Morgan Stanley basically came out and reduced their probability of a recession here from, back to a lighter, I think it was basically only 25% chance of a recession now. So everyone's starting to shift a little bit more positively here on the outlook there. And there was even some analysts were actually saying, we've gone from hard landing to soft landing. And, a couple of guys overnight were saying no landing. So it's funny how the whole shifts. You get a rally and then everyone changes their mind. So but yeah, the market will sort of shift its opinion. It's often gets super bearish at the lows and then it gets super bullish at the highs again here. So look, I think the Dow's had a good run here, but it looks a little tight again as well. Sort of, this is more of a corrective sort of rally here. So ideally, I'd love to see this sort of come back in a little ABC sort of three-wave correction. Put a high low in here, maybe somewhere around 32,000, and then go from there. That would be the ideal setup in terms of the cycles and technically, and so these things take a little bit of time to set up, but overall still pretty constructive.
Well, we move to some of the trading shares now, which is questionable because we've got some commodities in here. So we want to understand Santos. You've got sort of these arrows here indicating that it's struggled to get through. It struggled to sort of get back up to its high. It retested and didn't quite get to its high. And now it's sort of got this downtrend where it's just not been able to push through. What's this saying to you on the Santos side of things?
Yeah, so I mean, there's two things there. We've got an ending diagonal, so the which is sort of often how these sort of peaks can come in. They're sort of overlapping sort of tops there, and so that's a little three thrust sort of top, ending diagonal. It's just had a lot of sort of major peaks can come in that way. But what's more interesting here is sort of how this is traded down. That's traded down from that peak, pretty heavy volume, and it's had a bit of a rally back. The next leg down again, some pretty heavy volume, then a rally back. Next leg down, heavy volume again. I mean, you basically you study Wyckoff. This is like distribution type behavior, Chris, as well. So this is, if you study that sort of Wyckoff in detail, start looking at sort of looking under the hood, as I say. The price action and the volumes there are just that sort of negative, characteristics. So that's a little bearish here. And I mean, technically now we've sort of got like a descending triangle sort of set up as well. And then the last week here, we've seen a reversal down and some pretty heavy selling. So that sort of a descending triangle is sort of, more than break down than up. Obviously, ascending triangles more than break up and down. But the volume profile there is pretty negative. And, if you think about just the inflationary pressures that are easing here, and oil price sort of cools off here, if the Fed gets what it wants here, then these sort of could fall back here. The thing you can't see on that chart there, Chris, is if you go back, say, 5 to 10 years, you'll notice the stock's actually in a pretty strong downtrend, which is sort of quite surprising when you consider how strong this rally has been off that sort of 2021 low. The bigger picture, go back and look at the 10-year or the monthly. The stock's actually been in a downtrend for a decade here almost. So it hasn't actually taken out a swing high. The XEJ, the energy index, is even more bearish. It's like 10 or 12 years of actually lower highs, lower highs, lower highs. So even though this rally's been pretty impressive, still in a pretty solid downtrend. So that's the backdrop there. So I just see a few concerns here. The price action worries me. The volume profile worries me. We've got an ending diagonal, which is classic sort of topping stuff. We've got a descending triangle. So, this is super bearish sort of technical picture. Just put all the noise aside, yeah, I mean, to me, the only thing which can sort of hold the oil stocks up here is if inflation persists. So, which it may well do. I mean, the Fed may not get on top of inflation here, and inflation might come back here. But the technical picture is pretty bearish here. I think the Fed's treating inflation pretty serious. So at this stage, the market's kind of convinced they're on the right side of it. So, you know, as I said there during the week, they gave all my secrets away last Friday. Just let the price action tell you what it's, you know, the price action is not so constructive here. So, yeah, so this looks pretty bearish to me. So I'd be concerned if I was long Santos here. I'd be, you know, I think if it breaks below that sort of 680 level, closes below that in a weekly, that'll be pretty bearish.
Well, it's probably a similar boat to Woodside because you mentioned the energy sector, and I think you've got that chart in here later in the report, so that'll be a good one to look at. We've got Woodside on the screen here. We've got 1, 2, 3, 4. So this is something that you've put into your report many times, not for Woodside, just on other opportunities when you've seen this overlapping or three thrust. Is that what we're looking at here?
Yeah, that's right. So this sort of 3 thrust high, or this what's referred to as a broadening top. I mean, we've seen. I think I've shown Woodside before, and also BHP and Rio. They make these patterns all the time. The most common is to do the 3 thrust high, so that's the normal broadening top. There, occasionally, BHP and Rio sort of might do it every 10 years. They do a fourth. They can go up for a fourth attempt high here. So. What that means is, you know, that you might think, oh, that's quite bullish there, but they're overlapping here, Chris. So each sort of pullback pulls back into the range, and then we only go slightly higher, pulls deep back in the range again, goes slightly higher again, deep back, pull, you know, slightly higher. That's not a bullish. So that's a corrective sort of pattern there. So that's not, you know, a bullish trend is one that sort of sits on top there and builds on top of each other. That's overlapping trend here. So that's not so, yeah, that's what we want to see. That's an impulsive bullish move here. This corrective thing, that's a corrective trend. It's not positive here. So the last thing on that chart is from the fourth peak is a heavy down move there and pretty decent volume. And the volumes on the way down there were pretty decent. And then what's volume done off the low here? That's good volume on the way down. And then we've bounced here on much lighter volume. And the heavier weeks are the down weeks in there. So again, the volume profile is actually a bit of a concern here. That's like a little bearish sort of pennant flag coming. You know, oftentimes these continuation patterns, it's how they trade into it. So we've traded down into that continuation pattern, and usually favors another move down here. So again, it looks pretty negative to me. So just that sector looks pretty negative. I think even Beach Petroleum looked negative. So yeah, just, you know, the stocks look pretty negative. So the price action, the patterns, the volume, I'd be concerned here. So yeah, and that last sort of, or in the last sort of group of charts here, the XEJ, as I said, that trend is down for 10 years, Chris. It's been, it's a long-serving downtrend here for the
we might as well jump to it.
Look at that, so that's actually quite surprising to me. I was sort of, when I was looking at that, I thought, geez, this is actually, it's a pretty strong downtrend. Everyone's getting so bullish here. I just can't understand how everyone's getting bullish commodities here. Whereas the cycle suggests that commodities is the last thing to go down, and also the inflationary cycle too. If inflation is easing, then commodities should ease. So you should only be long commodities here if you think inflation is going to be rampant here for the next 4 or 5 years. So it might be. I might well be here. We could have another 40s, another 70s there. The thing about the 70s there, if you go back and study those commodities there, you'll see that as much as energy was number one, there were some really big years and there was some really big declines as well. So quite erratic moves. Yeah. So you had some 100, 200% returns, and then you had some 40, 50% drops within that. So some pretty brutal moves there. So you've got to get the timing right when you're trading those sort of moves. So the price action to me looks pretty negative. So we got a little 3 thrust high at the top, overlapping, starting to volume profile, just downtrend. I can't get excited there. I just avoid all the noise, focus on the chart. The chart's telling us to be super cautious here, very careful here. if we break through the bottom of that little pennant, Santos break through the bottom of that little triangle, technically that's a bearish sign. So let's let the charts, the price action lead us here.
Well, that's quite a bearish picture on the energy side. If we move from one type of resource to a different type of commodity or almonds, Select Harvest you've looked at before. Now, this big down probe here that was sort of testing lower prices, failed to stay lower, and then rallied the week to close back up near where it opened, near its highs. How do you see, and why is this catching your eye here on Select Harvest?
Yeah, so this is sort of classic seller rumour by the fact here. So the bad news sort of came out at the low there, obviously softer almond prices. And yeah, demand out of China's been a bit low, obviously, because of lockdown. So it's sort of, we've found that sort of low there and then recovered on that bad news. So it's sort of probably the reason why we've had the big decline there is it's sort of widely known. So, I was just like sort of talk about, I think conditions will improve. Obviously, China opening up will improve. But yeah, the price again. What's price action telling us here? Price, went lower there and rejected it, and then it's had a retest here last week as well. Managed to sort of hold there, just showing a little bit of support there. So pretty constructive here. The volume sort of, just showing sort of nice, what I think is accumulation type sort of behaviour. Might take a little while to build here. So so I think any weakness there, sort of bring it back into the 380 sort of region there. I think it might be a good time to add here. So I think these things take time here. I think it'll build a little bit, but I think this is sort of constructive.
Well, one that if we move into a chart, that's one of our favourite patterns. You've got a VCP in here, so might be a good opportunity for those who are new to VCPs to take the opportunity here to walk us through how you see this VCP setup and why it catches your eye.
Yeah, so it's not a bad VCP there. It's had a nice little bounce off the low, pull back into a sort of higher low, and then rally again, hit the same resistance point. Pull back shallower this time, gone back to the high again, and then has sort of pulled back again, but has still been sort of shallow and holding up under the high here. So it's sort of holding up under that level there. So that's a good sign here. That's basically an ascending triangle. That's a little VCP edge correction getting smaller. The one thing missing here is the volume, Chris. We're not sort of seeing a great VCP would sort of see the volume a bit stronger on the up weeks, and then the volume would taper off on the down weeks. So we're just not seeing that there. So sometimes you can get these VCPs and they all look pretty good, but again we've got to look under the hood a little bit sometimes and sort of see here. So they can still break up here. I think I saw Aristocrat, make a false break here recently off what I consider to be quite a deep sort of pullback. It looked a little sharp, and the volume didn't really come in. So I wouldn't consider it to be the greatest false break, but it still ended up going higher and moving higher and having a good signal. So this one's not the best VCP, but it can still go high here. So, I'll probably just be watching for a breakout of this sort of upper edges there. But I'm probably want to see a bit of volume come in. So can meander around like this for a bit, but I would like to sort of see some more volume come in and just show its hand a little bit. So it's not too bad. Not too bad.
Well, another one is one of your favourite patterns, false break. Have we seen something occur here to get there with Sonic Healthcare when it came down this little red circle?
Yeah, it did make a little false break there. Hasn't been impulsive off the highs. So again, it's sort of been a bit of a tempered rally there. So like a lot of the other stocks have actually, things like Domain, I think Bega, and there's quite a few other false breaks that are traded there, which were pretty good. That's some decent moves. But this one's sort of been, it's had a move up here, but hasn't been exactly impulsive. And I do like the fact that it's finally broken out of that little downward channel there, you might sort of say. It's not the best, only really 2 touches there, but breaking above there is sort of constructive. A little worried about that volume there. Looks a little distribution orientated, having light volume and then hitting a top there. So might just retreat a little bit, but I'll be sort of watch this retreat here and just see what happens here on the retreat there. But definitely like the sector. I think healthcare is a good sector to be in. Seen a few winners in that sector already. So just looking positive there, but probably going to retreat back a little bit into the setup there. Just yeah, just see how that volume just sort of spiked this week. That's always get worried, but if it runs up on light volume and then has a spike in volume, it can be distribution oriented. So, yeah, I'm still quite positive this stock in the sector here. I just think maybe this might retreat here. So we probably want to see 2 or 3 weeks of trading on its side here, sort of hold that channel, and then maybe you can get going here. But yeah, this is where sort of sometimes you got to look at the volume's got to, you know, this is not a bad signal here, but since then we haven't seen the volume profile there. So, yeah, you know, sometimes you got to give trade a chance, but I mean, so far it's not really driving here. So it's probably, you know, I'm still sort of long some of these, but I would have liked to have added to this position, but I haven't added to it because I haven't seen the right ingredients to add to it.
That's a good point, not adding to it because it hasn't ticked all of those boxes.
Yeah.
If we stick on that medical healthcare theme, you've got Medibank Private, more into the insurers, but are obviously somewhat exposed to medical as well. What's this saying to you here? We had that data breach, huge announcement. We talked about it around the time, but it's rallied off those lows, massive volume after that drop or throughout that drop. And then it's sort of, as it's pulling back here, these volumes have still stayed a bit lower or more normal if we can look back over the year. How do you interpret that?
This is sort of where fundamentals and price action are agreeing, Chris. So, you know, we got a data breach, which I think is sort of, I know relative to the share price, obviously, you know, not good news there. But me personally, I don't touch much as that. You know, sometimes you get bad news. It can be a downgrade on earnings, or it can be something monumental to the business. But I felt like this really wasn't going to affect the business that much. This is sort of almost like an outside force, even though it's, you know, internally here. But I don't think it changes the business. So yeah, I mean, we've seen there that the volume came in at the lows there. We had a nice little bounce, and then we've basically had a little bit of a pullback, and the volume dried right up there. Really, you know, really quite light on the pullback, and then we sort of started to sort of show support here. The thing I like to look at there is that, you know, so we had that sort of from the low there, we sort of went up, you know, 1, 2, 3, 4, you know, maybe 5 weeks, if you call it inside week. And then we've had 1, 2, 3, 4, 5 weeks down. So 5 weeks up, 5 weeks down. So basically time in sort of equilibrium there, you might sort of say. It hasn't struggled to go down lower. You know, no selling coming in. To me, this is a nice sort of safe, you know, this is like a safe portfolio stock here. It's not going to make a super massive return here, not like a high growth momentum stock here, but yeah, this is still going to have a nice move here. So I think this looks pretty positive. So thinking 310 at least there. I mean, I think the 50 days just under 320, so it could go back to 318, something like that. But yeah, I just don't think anything changes in this business just because I had a data breach.
Well, since they announced it, we've heard a few other data breaches in the Australian industry. So
yeah, that's right. So yeah, it's not commonplace. I mean, all the hacking stuff going on at the moment, it's really, there's a lot of you know, that, yeah, there's a lot of dodgy stuff going on out there on the hacking front there. It's really elevated here in the last year. So it's not sort of something that we should be surprised. It just tells us to be all a bit more guarded about our own personal circumstances and don't give your personal details out too willingly. And yeah, so just be definitely more guarded with all your personal details and check and question everything personally. But yeah, I think the price action looks pretty good. So I think this looks higher there. Looks like it's going to go higher, Chris. And it's right in the right sector too. It's the healthcare sector looks pretty positive. So, you know, and those last sort of few charts there, we talk about energy materials looking pretty negative, and healthcare is on the way up here. Really, after really impulsive, like 2 or 3 years up to 2020, it's literally gone sideways. So this is like gone sideways here for 2.5, 3 years here. We actually held the range pretty nicely. That's really constructive there longer term. So, yeah, it's just sort of like a big pennant sort of flag here. You know, just basically shows that this index is struggling to go down here. So it's just having a bit of a breather here. So eventually, because that, you know, that's an impulsive move into that sideways move, these things normally break out in the favor of how they've moved into them. And that suggests on the upside. Yeah, exactly. So this is a sector we should be looking at. You know, in the past, it's had really strong returns there. And then we know why the the healthcare sector has been held back here because of COVID stuff there. So meant that normal activities have been held back here. So really, I think the biotech and the healthcare, those are sectors that are really thriving. And the biotechs are hitting out of the park. There's some really, some cracking moves in there. Clinivel, I think PME. There's been so many biotech stocks that are really flying, and the healthcare stocks have been pretty robust as well. So I just think this is the right sector to be looking at. So this is why I sort of, in my sort of intro to my clients there, was I saying it's really going to be really important in the next coming year here to be in the right sectors, because I think if you're in the wrong sector, if you're in those material sectors, if you're in energy and resources and have a heavy weighting there, and that inflation does ease right up, and then those inflationary sort of stocks, commodity stocks, have a big cool off, you could see a big decline in those stocks. So if you're long heaps of those and you have a massive decline, your portfolio is going to way underperform. And if you play it too safe here, just being in a broad-based, portfolio as well, and everyone's staying out of growth, and healthcare, everyone's been a bit nervous about it as well. But if these end up being the really strong sectors here for the next 12 to 18 months, and you're light on in those areas, you're going to underperform as well. So I think it's really imperative that you're in the right sectors here for the next year. I think it's really going to prove beneficial, and just similar to 02, 03, I keep talking about that period, but there's so many similarities there. That growth really took a while to get going, but then it really, really did sort of take off. And our index in Australia actually underperformed because commodities were still in a bit of a downward cycle there for a bit later. So that's why it's sort of, it's really important to be in the right sectors here. So start looking at some of your indexes, the sectors, and I guess it's a bit like what you're doing on the Fridays, Chris, with momentum. We want to be in the sectors and in the areas where the market's getting some positive momentum actually going up here. So without sort of putting getting too complicated here or having too strategic views, let price do the talking here. Price is telling us here that they're starting to get interested in growth, starting to get interested in health. Let's follow the sectors that price is telling us that the market is most interested in.
Well, that's what the best traders of the last 100 odd years have been doing, isn't it?
Exactly.
It works for them.
Yeah.
Now, we'll probably take this opportunity to look at another indice that you've put in here. You were talking about materials, you're talking about commodities, and that could actually be a detriment to a portfolio if inflation does keep coming off. So if that is the case, like we've been seeing for the last couple of weeks, and we've seen it in the share prices of BHP, Rio Tinto, Fortescue, you've also shown the energy charts not contributing to this materials one that we're looking at right now. But thinking BHP, Rio, the commodities, those types of commodities, what's this FB down here, false break, and then possibly one up here? Is that an alarm bell up there?
Yeah, that is. I mean, it's a false break on the weekly chart. We do have a little three thrust overlapping top there again there, Chris, as well. So like basically a third marginal new high. So that is an overlapping trend there for the materials index as well. So, but yeah, it can be volatile there. That's, if you go back and look at the XJA 2000 or 2003 there, you'll see that type of behavior there, quite volatile, marginal new high, marginal new low, marginal new high, marginal new low. Quite volatile behavior there. So some indexes sort of can do that. Our index did that, and probably materials probably played a large hand in that. But just interesting here that, to me, like a lot of the stocks in the materials index have sort of gone up here on like the last sort of 5 to 6 weeks have been really light volume, and the volume's only just sort of come in at the high here, which is, no, it can be that sort of distribution type sort of behavior. So that's concerning. I think, the Rio, Fortescue, BHP, they're the majors there. They've all gone to sort of key technical levels as well. So a few of them are sort of just stayed under previous highs. Others are just gone just above previous highs as well, a little false break here. So they're all sort of sitting at key technical zones there as well. And just going to a new high here and failing here, and a bit of volume coming in, is a bit of a concern here. When I see the energy index starting to break down as well, just some of the stocks are sort of showing some concerning sort of characteristics. So there's enough there that's got me a little nervous there. Look, I know we've talked about these commodities for a while here now, and I haven't been right there. I've sort of been wrong about them. I've just been concerned about them. I haven't been I haven't wanted to trade on there just because I'm concerned about what could come later. So I've sort of been wrong about them, being this strong here. But I just sort of know that these things can sort of end. They're normally the last thing in the cycle to sort of come off. So I'm just nervous that they can still have a downward move here. But I mean, the only thing that's going to save them here is if inflation stays rampant there. And maybe it's personal. I just don't want that. I think that's harmful for everyone. And I'm hoping the Fed is definitely treating it seriously enough to get in front of it. So just wish our bloke here would wake up. But yeah, we can, fingers crossed for today. He'll move rates slightly higher here, but who knows with him? Actually, he's on a page unto himself, really. So, but the charts are just showing some concerning characteristics here at the moment. So just be concerned about those commodity space here.
Well, let's round out these indices, these sectors of the Australian market. It's not all of them. It's not an exhaustive list, but you've got the infotech here, which is a really good one to look at because at the start of the report, you're talking about the NASDAQ, how well that has outperformed in the last couple of weeks versus the value side. And if we cast our minds back to October lows 2022, so I'm going to find that on the chart here, you were talking about the Aussie market being more of a value-based one. So this is the information tech. If we can kind of categorize it like you have here, a bit of growth and technology sit within this space, you're getting like this condensing movement here. Maybe it is VCP, maybe it's a triangle, and then you've got this last week here where it's come to the upside. So what stands out to you the most on this chart?
There's a lot going here on this chart, actually. Sort of like the one thing that you can see there, well, probably you won't see there, is that 24.50 down to 12.20. That's a 50% decline, Chris. That's a massive decline for an index. That's not a single stock here. That's a basket of the stocks there. So talking about all the tech stocks on their Aussie index here having that move, that's a pretty large decline here. So that's pretty nasty. But since then, we've had we do have this sort of series of high lows sort of building here. The price action has tightened up here, and now we've seen a little bit of a breakout there. So we've got our VCP. We've got our second high low in there, price action, and we started to see a little bit of volume actually come in on the rallies and then start to decline on the pullbacks, and then rallies, volumes coming in again. So started to see some sort of constructive price action, similar to NASDAQ, isn't it? It's actually quite constructive, the price action. So again, coming off a really deep low, and everyone thinks we need to come lower here. 50% correction for an index is big. So in anyone's language here. So I like what I'm seeing here. I just think again, this is a sector there which is starting to sort of show some legs. The volume is sort of is showing supportive sort of characteristics. So again, this is an index that actually is starting to look positive. The price action, the volume analysis is So to me, it's a sector we got to watch here. So we got to I'll be looking really by March here, I would like to have a lot more growth in my portfolio here. That's my mission here for the next sort of 3 or 4 weeks, is to sort of try and look for some of the stronger growth stocks and be a little bit more heavy in that regard here. If my timing's right here, sort of March through to June could be a nice window for growth here. So, but I'd like to see a little retreat. But the price action is pretty bullish here so far. Sort of my only concern is we mightn't get much for a pullback. But hopefully we do.
Well, that's a good lead for the next month or two ahead. We'll look into that. Hopefully we can get some good opportunities, maybe surface them in future Tuesday reports and the Friday one. So I'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris. I'll try and get much more of a life here and get out of those books.
Oh, well, our benefit, you're reading more of the books and sharing the research. Yeah. So I don't think the viewers want you to stop reading books. But to that point, we do expand on Gary's extensive research and depth of these reports. There is a whole playlist on the right-hand side that goes back through these reports. So you can see those Tuesday reports. If you want to get alerted, you can click on the subscribe button. Also on the right-hand side, Gary's mentioned different setups. So things like volatility contraction patterns or false breaks or springs, Wyckoff springs, those types of setups, as well as he's done in previous reports, gone into greater detail, and the one that we're bringing up is where in a previous report, Gary went into the impact of the inflation on the markets or inflation on markets and the different sectors like he's got here this week on the 40s and 70s. That was something Gary delved into in about July last year. Now, a lot of other people are covering that now, but you can go through and benefit from his in-depth research where he gets sore eyes from reading and see that on the playlist on the right-hand side. Finally, on the left, you can see Gary's Twitter handle if you want to follow him there.